when you are under a lot of pressure, in a critical moment, in a championship or in a particular race. It's the one that can put together the combination between aggressivity and calculating things that will get the best result. And you need more than anything a very clear mind to understand exactly when is the moment to be aggressive, when is the moment to be calculating. To win a championship, you need the combination of those elements in the right doses at given moments.
Hi, welcome to this video today, which is all about how to trade forex maximum profit with a very simple technique. That simple technique is knowing when to increase the risk on a trade above your normal risk and basically how to do it correctly. And you'll never make big money in forex trading unless you learn to vary the amount you risk per trade and risk more on high probability trade scenarios. And I'll come back to that in a moment. But first, because I've started the video off, short clip there of Ayrton Senna, greatest Formula One driver of all time. And what he is saying is needed to succeed at Formula One is exactly what is needed to win at forex trading. You need to have a clear head, you need to be calculated, and you need to know when it is worth taking the risk. And basically, I think forex traders, when they come in the market, they're really mostly risk averse. They believe that old saying that's so frequently quoted online, which is only risk 2% of your account equity, never more, never less, keep it nice and static. Well, if you do that, you're never going to make big money at forex trading. It's a probability-based market. In a probability-based market, it's been proved with numerous statistical studies, you need to vary bet size, not only to increase your profit potential, but also to decrease your risk. Now, if you take forex trading, it's a probability-based market. So too are the games of blackjack and poker. Okay, now they're card games, but they're probability-based, the same as forex trading in structure. And it's no coincidence how many players from blackjack and poker have gone on to become really superstar traders. And I think one of the reasons that they do so well is they know about variation of bet size. You need to basically cut your bet size in forex trading when you're losing, and when you're winning, you need to know when to increase it so you can really boost your account equity. Now, in terms of gearing up, I would make one point on this, is that you should only do it when you're winning, okay? Not when you're in a period of drawdown. You never want to be too far behind in forex trading. So if you're ahead and you see a high probability trade, there is no problem in risking more on that trade, in my view. And in terms of how much you should risk, I'll just give you it in relation to my trading strategy. I would normally use a 2% bet size. However, I'll cut that back to 1% if I'm losing. If I'm winning, though, and I see a high probability trade, it's 4 or 5%, which will be risked on that trade. Now, in terms of selecting out a high probability trade, you're obviously going to do that in relation to your strategy. If you know the edge that you have, you're going to know which trade scenarios look really good to you. Now, in terms of high probability trade setups, we all know that any trade setup can go wrong. However, that's a risk you have to take. You have to calculate whether it is worth risking more on that trade setup. And I'll tell you one easy way to increase the profit potential on a high odds trade setup. And it's to do with your stop loss, okay? Many traders can spot high probability setups, and yet they think they're so high probability they can really trade with a tight stop. Okay, and they sort of do a fictitious risk to reward, but so they put their stop close, then work out their risk to reward is something like 5 to 1. That is their opinion. You should never ever have stops too close, even on high probability trades. For example, at turning points, if I'm trading a turning point, my stop loss is going to be at least 100 pips above the high that I'm trading into. You know, you can't trade with stops just above the high. It's just not a good way to trade. It's what the majority do. If you see a high probability setup, use more room on your stop. Also, okay, let's say you want to catch a big trend and trend follow. You have to keep your stop back. And too many traders miss big trends or don't catch much of them because they move their stop up too close. If you see a breakout and a trend get in motion, you've got to keep your stop well back, because obviously as a trend, even a strong trend, when it's in motion, there are going to be those sharp pullbacks. So you've got to keep your stop back. But my point here is when you're trading high probability setups, don't go too far into the probable risk reward of stop to target and think, well, this is a 5 to 1 or it's a 6 to 1. It doesn't matter what that probability looks like. It's not a probability, it's your opinion. The probability is what is likely to happen. By having your stop further back, you increase the probability of the trade. So you might have a lesser risk reward, like 3 to 1, but the chances are you are going to hit your target. That's all that matters. I think in terms of Senna had courage. And I think most forex traders do not have courage. They lack conviction. And this is because they don't really have true confidence in what they're doing. You need to really develop your own strategy, no matter how simple. Get total confidence in it, so you've got the courage to go for it. And when I mean courage, I really do mean, having that determination to go for the high odds setup and milk it for all it's worth and not be frightened. Too many people are frightened when they're in the forex markets. They're always frightened of losing. And there's nothing wrong with losing. That is part of the game. And I think traders just need to accept and embrace risk. I'm not talking about you want to be rash or really take risks that are not calculated in advance. It has to be a calculated risk, but you need to be comfortable doing calculated risks. You need to be comfortable betting bigger and really having the conviction to go for your trades. Now, it doesn't come overnight. I think if you've got a trading strategy, it does take a little while to become totally confident in it. But when you are, and you see those high probability setups, there is no problem, in my view, in hitting them hard. And if you do this and you learn to do it correctly, you'll really boost the equity in your account. I mean, variation of bet size is not really seen as one of the keys to success by most forex traders, but it's the very key to success in a probability-based market. So, basically make sure you've got that well-researched trading strategy that you are totally confident in, have the courage of your conviction, and do not be afraid to hit big on the high probability trades. So thank you for watching me. What I'm going to do is I'm going to go out with some more very wise words from Ayrton Senna, and any forex trader should note them. Thank you very much for watching me as usual. Take care and have a good day.
It is not simply a stronger muscle or a better tonus in your muscle, but it's really the power, the strength you get, physically speaking, to your body, but also to your mind. And you only really learn by doing it, I believe. Once I realized that there was something special in there, I really focus and try to learn about myself, because it's basically learning about yourself, learning about your own limitations, learning about your strengths, your qualities, and trying to make as a whole a smoother person.